Is the 70% rule dead? What's up YouTube, it's Matthew here. Welcome back to my channel. In today's video, I'm going to talk about if the 70% rule still applies in today's market with higher home prices, higher interest rates, the Fed doing crazy things. Are we actually in an inflationary time? Are we officially in a recession? And what does that mean for wholesaling real estate and making offers to sellers and working with cash buyers? So this is a question that I get from you all, like, oh, do we need to make adjustments and other things like that? And by the way, the 70% rule is essentially, that's what the cash buyer wants to get the property at. Cash buyers are looking to get the property at 70% of the market value of that property, that after repair value of the property, and then minus repairs and then minus your wholesale fee. So for example, if a house all fixed up can sell for $100,000, take 70% of that, which is $70,000. And let's say the house needs $20,000 worth of repair, you subtract that. Now you're down to $50,000 for your offer price to the seller. But now, since you're not the flipper, you're not the person flipping the property, you're the one wholesaling it. Let's say you want to make $5,000 from the property, right? And so you would make that offer a little bit lower at $45,000. So you subtract the $5,000 from the $50,000. I hope that makes sense, but that's essentially the 70% rule. It's been an unwritten offer rule within the wholesaling industry for a while now. In today's video, I'm going to talk about why the 70% rule is not dead and why the 70% rule is dead. And then I'm going to finish off the video just suggesting things that you can do in today's market, you know, different adjustments or pivots that you can make in offers to sellers and working with your cash buyers. First, I want to talk about why the 70% rule is dead, why you shouldn't use the 70% rule. So number one, that's because of home prices are rising. They are already risen, right? They're super high at the moment. And so you can't get the same deals you were getting pre-pandemic than what you're getting right now. Sellers are way more educated with how much their home values are, you know, how much their properties are worth, and they have tools available for them, right? They have Zillow, they have other things like that. This is what happened with the car industry, right? People used to always just go to Craigslist or go straight to the dealer to sell their car, and the dealer had all the information about the car market, right? They had all the market information. But after the internet and Kelley Blue Book, people started to understand, wait, my car is actually valued at this, I can get more. And then they started selling it themselves or going to the dealer and saying, hey, this is what my car value is worth. And that changed the game for people selling their cars. And I think the same thing is happening now for houses. Homeowners understand the value of their house. They're reading articles, they're listening to the news of people saying, hey, your values are higher than you think. You can sell your house and get this amount of money back. And so with that understanding, you have to come to the table with a seller and understand that they know their value of their house, even as is, right? But they may not know the as is value. And so that's where you come in and you can educate them of the as is value. Like, hey, yes, all fixed up, this property is worth higher than it was last year, but your property does need work. And so yes, 2 years ago, I would offer you X amount of dollars, but now I'm actually going to offer you this amount of dollars, which I wouldn't think to offer you ever before for a house in this area in this condition. But with the market being crazy, I'm actually offering you so much more than I ever thought I could offer you. I think the seller will understand that where you're coming from. But the reason why the 70% rule would not work is that you have to understand that with prices being higher, the percentage of margins are lower. So home flippers can actually make more dollar amount on a flip, but their margins might be lower. I hope that makes sense. So for example, let's say pre-pandemic, flipper could buy a house for $50,000 and sell it on the market for $100,000. They're all in $50,000, so they make $50,000 from this property. So that's a 50% margin. But now with crazy market and all the issues with supply issues and everything like that, this house now can sell for $200,000. It can sell for twice as much. And so instead of buying it for $50,000, this person buys it for $130,000. They're all in $130,000. They're making $70,000 from this property, but their margins are lower. They don't have 50% margin anymore. 130 divided by 200. I can't do the math right now, but that's a lower percent gain, like close to 40% gain compared to 50, but they made 70,000. They made 20K more. I hope that makes sense. So instead of coming to the seller and saying, hey, I'm going to offer you the 70% rule, it just doesn't work because home prices are higher. You know, everything is higher. So now instead of 70%, maybe I can offer them 75% or 80% market value because market has changed. And make sure you always talk with your cash buyers, understanding where they're coming from and how much they are looking to buy properties for and their ratios and formulas. So that's one of the main reasons why I think the 70% rule is dead, is because ratios probably are lower, but dollar amounts are higher. So for that reason, the 70% rule is dead. And because homeowners, they know the value of their house, don't try to deceive them or trick them or anything like that. They can look up the information and other things like that. But of course, just offer the as is value. And so the 70% rule in this scenario just doesn't work. Now I'm going to switch to flip and talk with you all on why the 70% rule is not dead. So to start with, let's talk about the state of the economy. One thing you all probably have heard about is supply issues. And with supply issues, there's higher costs of supplies, right? Which carries down into cash buyers for rehabbing properties, repairing properties, maintaining properties. And so the cost to flip a property is much higher than it was back in the day. And so with the Fed increasing the interest rates, home prices are steadily staying constant or even dipping lower in some scenario. And so before, even a few months ago, a flipper could go over budget on a property, but that house can sell for way over asking price. This is not the scenario anymore. And so now that you have new market data, you know the new market value of everything, you can stick to that 70% rule, right? Because houses are not selling as high, right? And cost of goods, cost of labor, cost of materials are so much higher. And so that digs into the profit margins, the profits of a cash buyer. And so looking at a scenario, you have to understand that, yes, some home buyers, right? You have heard hedge funds are not buying as much houses as they were earlier this year because their ratios, their formulas are not working right now. Yes, you could have sold them a deal 95% market value, but that's not the case anymore because those houses are not selling over market value anymore, right? So they can't make money in those scenarios. And so you do see a shift in the economy. And so you see cash buyers and wholesalers going back to normal levels of their offers. Instead of them now, earlier this year, they were offering 85% market value. Now they're a little bit lower. Now they're at 75, closer to that 70% range because of the Fed hiking interest rates. Return lowers home prices. There's still a supply issue. So cash buyers are paying more to rehab a property, right? They're not going to be buying like they were before because home prices are constant now, but costs are still rising for them. So they're not going to buy a house 80% to value anymore, right? And just to make this case even more, real, is that I was looking at a house back in my hometown in Illinois, and I saw that this house, it was updated, nice. It wasn't super old, anything like that. And I saw it's been on the market for like 40 days. Now, 40 days back in the day was a normal time, but in this market, that was a long time, right? With all the craziness happening. So I contacted the realtor and I said, hey, I saw that this listing has been under contract twice and it's been on the market this long. What's the issue and everything like that? And then they told me, hey, the first buyer was a VA loan. Everything was good, but the interest rate got them out of the deal. The interest rate moved them from being able to afford this house to not being able to afford this house. And so you can imagine for the flipper who flipped this property, put it at a certain price because he or she is thinking, oh, okay, this is a hot market, I can sell it for this much. But they have two people going out of contract because of cost. The other one was because of there was a lien on their property. There was a lien with the person, and now it's affecting their listing. Now people see, oh, this house has been under contract twice, it hasn't sold. Maybe there's something wrong with inspections or something like that. And so this flipper had to adjust their price, right? Now they've been doing steadily decreases of the home price. And so that's where I see the 70% rule still working right now because the economy, because the Fed is trying to tighten the economy and just try to slow it down. And so we have to go back to the 70% rule. All right, so just to end off, I just want to give a few suggestions. So number one, talk with your cash buyers. At the end of the day, they're going to tell you their buybacks and how much they're looking to buy a property in a specific area, type of condition, and the type of property and other things like that. They will tell you the market value. Number two is that if it's a hot market, like there's some areas that it's impossible to get a house, right? Even still, even with higher interest rates and everything, 70% rule know, probably never even worked even pre-pandemic for them because their values are high or because it's super competitive in that market. And then you have to stick with maybe a higher formula in those scenarios. All right, you all, hope you all enjoyed this video on if the 70% rule is dead. I would love to know your opinion down below. Please comment down below. Make sure you subscribe, like this video, and I'll talk to you all later.